Well, hello friends, welcome to Rewake videos. I am so excited that you are here. I'm so excited that you took time to just join us and be able to take another attempt to growing financially. So today we are on mining money. And as I have mentioned, mining money is all about giving you information which will help you with safe investing and growing financially, right? So today on Mining Money, as I promised you last week, we are looking into Allan Gray. So we're looking into Allan Gray. This is, I think it's important for me to just mention that this is 2024. I think it's the 29th of April, 29th of April. I'm doing that. I'm saying that because information changes. So you might find that tomorrow the information is different and they've improved there and there. Or maybe 10 years later, they've improved there and there. So we'd have to make another video. But other than that, friends, welcome to Mining Money. This is produced by Rewake Videos. I'm so excited that you are here. Please, before we continue, hit that subscribe button, hit that notification button, and hit that like button. The like button will tell me if you want me to create such content. So for the next 5 days, today is the 29th, right? For the next 5 days, I'll be looking into companies. So today's the 29th, 29th until the 3rd of May. So I will be looking into trusted companies, companies that we trust in South Africa that will help you to be able to invest, whether inbound or outbound. By outbound, I mean offshore. And also, there are people that they're not really interested in, how can I put it, DIY investing. Like, they don't have time to, study the markets and go and look for a company to invest in, then invest, and they're not interested in that. They are interested in companies that are reputable, companies that are safe, so companies that are trusted, which can invest their money, and their money is insured and everything is okay. They're looking for that. They're not looking for really studying other companies or easy equities. They have to study in order for them to invest, and they have to research, they have to watch YouTube videos, they have to study the markets, they don't have that time, but they have the money, however, to be able to go to a particular company and say, hey company, I want to be able to invest this amount of money every month, offshore, or inbound, it doesn't matter. And that company will be able to assist them. That's what they're looking for. So today we are looking at Allan Gray. Allan Gray is one of the, I think it existed since 1973. I think it's 50 years plus, if I'm not mistaken. So I looked through their website earlier, just to remind myself what is it that I wanted to touch on. We're not going to be touching on the entire website. We're not going to finish, but we'll be touching on basic things and things that I feel you have to know. So Allan Gray is trusted. Allan Gray is a big company, and Allan Gray, I believe, is one of the companies that will be able to get you there in terms of your finances. They will advise you, they'll help you invest, and they will help you grow. So as we get into it, I stumbled upon an article, or a page on the JSE, and they asked, or the title of the article is, why invest in shares? And I read it, of course, but I looked mostly at capital growth and dividends, right? So the other parts, you can go on JSE and just just search through their articles and read, and so that you can be able to understand some of the information that you need to get and understand as an investor. So basically, I looked at capital growth. I was interested in capital growth mostly and dividends. So let me start with capital growth. They said, simply put, capital growth is the difference between the amount you paid for your share and its current value. So it is capital growth is the difference between the amount you paid for your share and its current value. So if you bought a share a year ago and paid 100 Rand for it, and today the same share had gone up in value to 150, the capital growth will be 50 Rand. So you are able to determine whether you have made profit or loss on your investment by subtracting the price you paid for your share from the sale price at which you sold it. In the above example, you would have made 50 Rand profit. So I'm skipping. From our previous example, that would look like 50 divided by 100 multiplied by 100 equals to 50%. So they're calculating shares, right? So a profitable trade is one where you buy a share at a lower price and sell it when you buy shares. A profit is only made when you sell the shares at the highest price. Brokerage costs and tax are not included. You are also able to calculate the percentage of your return of shares by dividing the profits or loss you make at the sale of your shares by initial price you bought for it. So that's a calculation that I just gave you. 50 divided by 100 multiplied by 100 equals to 50%. If you owned 5 of these shares, then 50%, then this 50% would mean that you would made a profit or income of 250, calculated as follows. Brokerage cost and taxes are not included in these examples. Okay, let's go to dividends. Dividends are how a company rewards or pays out a portion of its portions to shareholders or investors. It is important to note that not all companies pay dividends, even if they are profitable. They can choose to do several things with the profit made, such as reinvest it into their business, pay off debt, pay a portion of these profits to their shareholders. Companies pay out dividends either once a year or twice a year. Should they pay it out after their annual interim results, it is the company's board discretion whether to pay dividends to shareholders and how much to pay dividends. For instance, if I invested 1,000 Rand at 10,000, if I invested 1,000 Rand at 10 Rand each with 100 shares, it pays out 20 cents per dividend and I would get $20. 20 Rand, sorry. Brokerage cost and taxes are not included in these examples. So you can just go on the JSE and just search JSE/learn-how-to-invest and just read the articles. They'll teach you a lot about investing and so forth, right? So I go through these things because I think, for me, they help me to be able to have the know-how and be able to teach people about investing, right? Remember, I'm not there yet. I'm not at the place where I'm a billionaire, I'm a millionaire. No. But we are on a journey of, getting into investing and growing into in investing. So we share these videos so that the information that we get, we can be able to give it to people and journey with them and grow together and be able to get where we need to get. Are we together? So Let's get into it. So today we're looking at Ellen Gray. So we're not going to take too much of your time. So already we are at 10 minutes. So today we're looking at Ellen Gray, right? So we're going to be just browsing through their website just to see if we can learn something. And perhaps if you are the type of investor who's not interested in DIY, then you can just look into maybe Ellen Gray, which will be able to help you and assist you in terms of investing. So just go onto their website, Ellen Gray, and be able to research and find out the information that you need. So basically, for me, when I looked at their thing, they're all about long term. As you can see, they say building long term wealth for our clients. As we celebrated 50 years of long term investing, we reflect on the gift of time and honor the commitment, conviction, and courage displayed through the ages. So you can watch the advertisement or commercial at your own time. So if it's performing slow, you have to forgive me. But I think it's my website. Is it stuck or something? So, but basically, when I studied their what they stand for, they all about long term, right? So, as you can see, we pursue long term returns without taking undue risks. Um, so for me, they are all about long term. 50 years of investing with our clients, best interest at heart. Chief investment officers and chief operating officers, past and present, reflect on 5 year, decades, long term. So you can watch that video at your time and discretion. Our approach to investing is simple. We look closely at businesses, we buy shares, we think are undervalued and sell them when we think they have reached their worth, regardless of popular opinion. Um, Time is the greatest gift of all. Time changes. Um, Time change. Time doesn't. Over the past 5 decades, we've learned that the value of time will remain the constant constant that endures throughout the ages. Benefits from our investment expertise. All clients, from individual to pension funds, get access to the same investment philosophy, process, and ideas. So let's check on what we offer. I wanted to let's start with the unit trust, before we go to group savings and useful resources. But I don't think we're going to touch useful resources. You can touch useful resources at your own time. But I want us to look at this mainly, right? Or should we start with about us? I think the first page covers the about us. Maybe let's look at our track record. Perhaps the track record will give us something different. But basically, the first page, when we just go through that, we saw that it covers who they are. So track record, you see, they're giving us the same information that we saw in the first page, but you can see that Ellen Gray Equity Fund. Oh, it's worth 802. So you can invest 802 through them every month on their trust, and benchmark is 256. So okay, let's. A benchmark is a standard against which things can be compared. We compare the returns of Allan Gray Equity Fund to average return of all funds in the South African Equity General category, weighed according to their market value from inception to 28 February 2015. The benchmark was FTSE JSE All Share Index including income. Okay. All right. So they compared with all share. Okay, so fine. Let's go to start a basic investment. So guys, this is where you come in, right? If you want to know more about uh, investing with Ellen Gray, you go to what we offer and you try and communicate with them and tell them what you have seen and what you have experienced through their website, and you are interested in a particular investment or making a particular investment through their company. So start a basic unit trust investment. You can invest in unit trust for most of your investment goals, from savings for long-term objectives to meeting your short-term needs. Guys, remember, I don't know if you remember, but I told you the other time that these companies, they use unit trusts and ETFs and so forth when it comes to investing. And, and I told you that if you were to go onto your platform, your DIY platform, and you invest on top 40 companies and you divide your money and divide it according to 12 months and 40 companies a month, no matter how much it is. And for 12 months, you invest that money in 40 companies. And in the next 12 months, which is the next year, you invest in ETFs and unit trust. Well, if you're using what you call this, if you're using easy equities, you'll go to unit trust rate. I don't know other platforms, but you can invest in ETFs that have top 40 companies listed in the JSE. So you can be able to grow, for lack of a better word, when it comes to your finances, and you'd be able to diversify your portfolio in a much more broader sense. So I don't know why it's not moving, but you'll have to excuse me. Maybe it's my network or my Wi-Fi. I don't know. But basically, when you tap into it, start basic. Let's click again. Let's see. Start a basic unit trust investment. There we go. It's moving. Your benefits from our investment expertise. We carefully manage your unit trust investments following our proven investment philosophy. To build your long-term wealth with us, you can invest or start a lump sum with a lump sum subject to our minimums. So you get choice and control. You can choose unit trust that suits your need and time horizons, while you can monitor your investment and make changes at any time without transaction fees. We encourage long-term investing. So as you can see, they encourage you to be able to choose for yourself, but they can choose for you, but choose for yourself. I would say that let them choose for you. Let them choose, because they're financial advisors. They know what they're doing. So let them choose for you so that you can be able to have it secure. But if you don't feel comfortable about it and you want to choose for yourself, then make research, go to them, sit down with them, let them show you what they have, what their products are. Then after that, you can then sit down and say, hey, I want to be able to invest in 1, 2, 3, 4. Ne? So don't be fearful when it comes to talking to financial investors, because they know what they're doing, right? So you can ask them as many questions as you want, and I'm sure Ellen Gray is open to answering all the questions that you are going to ask them. So choose a unit trust that suits your need. We offer a simple range of unit trusts suitable for different needs. When you choose a unit trust, there is a trade-off between higher potential return on the one hand and stability and lower risk on the other. So higher potential long-term return, higher investment risk and fluctuation. Allan Gray Equity Fund potential for higher long-term return with more significant fluctuation that could last for many years. Allan Gray Balanced Equity Fund, our flagship long-term. So you can basically choose. What do you call this? When you choose things like Allan Gray balanced, it means that it's going to be balanced. You can do it for long, right? And the volatility is not as flexible or risky, right? Also stable. When you look at stable, less fluctuation with higher inflation return. There may be some fluctuation within a 2-year period. Allan Gray Money Market Fund, but with Allan Gray Equity Fund, when they explain it here, potential for higher, that means there's more volatility. So volatility means it goes up, it goes down, it goes up, but that is for long-term investing. They promise you that as much as it will go up and down, after 10 years you're going to make money. That's what they're basically promising you. They're telling you that you're going to make money, right? So and you can see that as you click, more information comes out, that how much you can invest, where you can invest, and so forth, right? More information comes out: the Allan Gray Balanced Fund, the Allan Gray Stable Fund, and the Allan Gray Money Market. So that is basically what they're offering when it comes to people that are starting now. So you can actually click on invest now. Say you're interested in their money, whatever. You just click there and it takes you to the steps, and you follow the steps and you give them the documents that they need and be able to finalize your see, it's that simple. So you can do it at the comfort of your own home. So you choose an account to match your objective, you choose your unit trust, you fill in your details, you check and submit the things that you have submitted, then you finalize your investment. Sorry about that. So you finalize your investment in terms of giving them the money that they need in order for them to be able to invest for you. So you can also, as you can see, save for retirement. I don't know, let's go into it. So you can save. We're just gonna read the top part, then after that I think you just go through. So you can save for your retirement. You can use unit trust to save for your retirement. So you can invest directly into unit trust, or you can invest in unit trust via our retirement annuity. A retirement annuity gives you tax savings and a measure of protection. So if you are saying that you want to save when it comes to tax when you have retired, then you can invest through their retirement annuity onto their unit trust. Okay, so basically you would have to again choose. You would have to choose what is it that you want. They will listen to you. You would have to choose what is it that you want. That's why I am all about giving you the information that you need, so you can save for your child's education. You can start or transfer a tax-free investment to them. So if you have a tax-free investment with another company, you can transfer it to them, or you can start another one with them. So a tax-free investment it's not taxed. So I think it's the minimum contribution or the maximum contribution for a year. It's 36,000, if I'm not mistaken, 36,000, and maximum contribution for lifetime is 500,000, if I'm not mistaken. So, but you can check that with them, and they'll be able to assist you. So you can also transfer your existing retirement savings. So if you have your retirement savings with Salam, for instance, you can transfer it to them, and they'll be able to manage it for you, right? So get an income during retirement. Let's see this one. Let's take a look at that one. So they say that you can get an income during retirement. Invest your retirement savings and draw an income, sometimes referred to as a pension, with Allan Gray living annuity. Your investment is into your choice of unit trust. So they invest a lot in unit trust, and they encourage you to look into their unit trust so that you can be able to invest. And they give you different options of whether you want the kind of retirement that you want to you want to have, and so forth. So you choose your income, as you can see there. You get the choice and control, and you can appoint beneficiaries. Guys, I'm showing you this. I'm not going to go through the entire website, as you can see, but I'm encouraging you to just go on Allan Gray and just go through the website and be able to get the information that you feel you need, so that you can be able to make a decision that works for you. But basically, if you are between 20 and 50 and you don't have an investment, you can start here. You can start a basic investment. That's the tab that we started with in the beginning. You can start a basic unit trust investment, and you can choose what kind of unit trust you want to invest in. So if you are interested in Allan Gray Equity Fund, because of the high volatility, a higher long-term return with more significant fluctuation that could last for many years, or say you just you are young and you want to run with it for longer, you can say, no, I want a balanced or stable fund. But if you're a bit older, already in your 30s going to 40s and 50s, you can choose this one for higher volatility and pour more of your finances into it. And if you feel like you're ready, then you can just click there on invest now, then give them the details that they need in order for them to be able to start investing in your behalf. So you will choose an account to match your objective. I've chosen the account, and you will choose your unit trust. You will fill in your details. You will check and submit, then finalize your investment. So basically, if you are between 19 and maybe 49 or 55, let's say 55, and you don't have an investment, or even 59, if you don't have an investment, you can start there and start a basic investment in their unit trust. And if you're saying that if you are between 50 and 59, and you say that you want to invest for your retirement, or 40 to 59, and you want to invest for your retirement, you can come here and say, hey, I want to save for my retirement, or I want to where is the other one? I want to transfer my existing retirement to your company, Then after that, you can take it from there. Then also you can look into, if you are saying that, hey, I've been getting 40,000 rand from my company that I was working for. Maybe you can have a conversation with them, say that, hey, I want to have an income that is between 20 and 30 in my retirement, which is your pension. So how can I invest in a way that I will get that money when I hit 60, 65 until I die, so that they can be able to assist you. Have those conversations with them. One of the most important ones that I want to look at is offshore investing. So we're not going to dwell too much into it, because I spoke about it last week. I just looked at it. So if you are interested, you are young, you are between 20 and 40, right? And you're saying to yourself, hey, I want to be able to be safe. South Africa is going through elections. We don't know who's going to be president. We don't know what's going to be happening. Particular, issues may be rising. Maybe it's December and crime is rising, and you're saying I want to invest in another country so that I can be able to have more money that will be working for me. As a matter of fact, when you look at the current fluctuation of currency, of our currency, how low it's going, it might try and beat the dollar, but we are, very far from that. So now you know that for the next 5 years, if you were to invest in the United States market, the New York Stock Exchange, you know very well that you'll be able to make money, especially when your money comes into transferred into rand, right? So investing offshore, those are the advantages. Those are the advantages of investing offshore. So when you're investing offshore, you know that America is doing well, you're investing in the United States. If the UK is doing well, you're investing in the UK. Australia is doing well, you're investing in Australia. And as you invest in those markets, buying shares in those markets and so forth, and using this particular company, then you know that when dollar comes into South Africa, when you get your $1, it's 19 rand. So you made a plus, but also it requires you to be able to commit, especially because the currency, when you're investing in another currency in another country, the currency can be your disadvantage. Because if for instance I want to invest $1 in Amazon, then I would have to give 19 rands, so that means I have to commit. I'm putting in a lot of money. So that's the disadvantage and also the other disadvantage is, if America goes through a recession, it might affect your stock in America. If they go through selecting a president and things don't go right, it might affect political reasons, economical reasons, so many things that are happening in those countries. They can affect your investment. So investing in offshore allows you to spread your investment risk across different economies and regions. So we also speak about diversification of your portfolio. So what that means is that you not only, let's say you South African and you saying that I want to diversify my portfolio, you're not only investing in mining and banking institutions and property and different things, then you say that, oh no, yes, you have diversified your portfolio. You have stocks in mining industry, you have stocks in property industry, you have stocks in the top 40, you have stocks in particular things, and you have diversified your portfolio, but you need to spread, like they say, spread your investment risk. So that's more diversification. You go into other countries and you diversifying. You investing in property in another country. You're investing in their banking institutions in another country. You're investing in so forth. So many things so that's diversifying and increasing your investment risk. But with more diversification and investment risk, there is a potential for more profit. So it also gives you access to industries and companies that may not be available locally. Right? Offshore investments may perform better at times than local investments, and vice versa, depending on various factors such as global economic conditions. I spoke about that, and exchange rates, and I spoke about that, and are an important component of well diversified portfolio. You get offshore exposure through our core range of local unit trusts, which can invest up to a maximum of 45% offshore. If you want more offshore exposure, we offer 3 options which may be suitable for you. Okay, so random rand denominated offshore unit trust. I'm trying to read quickly, that's why I'm biting my tongue. Rand denominated offshore unit trust. You can use rands to invest in rand denominated offshore unit trust offered by Allan Gray and other local managers. Although your investment is priced in rand, your investment performance will be determined by the performance of underlying offshore assets and the daily currency movements. So, guys, I encourage you to go and study Ellen Gray's platforms and unit trusts and have a conversation with them and be able to look at what's happening, what's trending with what they are doing, so that you can be able to make a decision which will be able to help you in investing through them. So, guys, I didn't want to take much time, but it looks like I've went beyond 30 minutes with 5 minutes over. But other than that, that's Ellen Gray. If you are interested in investing in Ellen Gray, please do contact them, have a conversation with them, and tell them what is it that you want to achieve and what is it that you want to do. And in so doing, you'll be able to, for lack of a better word, you'll be able to, grow in your investment when you not necessarily go with them and not other companies, no, but when you have enough information and be able to have a dialogue with them and tell them what is it that you want to be able to achieve with your investment, then they will be able to know what is it that you need and be able to help you in order to for you to be able to get where you need to get in your finances. Remember, they have financial advisors, so they can also help you when it comes to your retirement, when it comes to say I want to invest through them for the next 10 years, then retire quickly, and be able to chow the money that you are getting via dividends. They'll be able to help you with all of that. They'll be able to give you the advice that you need. Guys, that's me for the day. I hope you learned something. I hope you got the information that you need, and I hope that this will be able to assist you. Please hit the subscribe button, hit the notification button, make sure that you like the video, and be able to comment down below so that we can be able to have conversations on matters such as these and look into other companies which you can invest through. Thank you so much. May you enjoy your day.